Introduction. Good morning, everyone. Thank you for having me here today. My name is Dane King, and I am a CPA, CMA, and FMA with extensive experience in accounting, tax, and business strategy. As the president of Stratking Accounting and Tax Professional Corp., I have worked with numerous businesses navigating economic challenges, including the impact of tariffs. Today, we will discuss business strategies for coping with tariffs, with a focus on the effects of US and Chinese tariffs on Canada in 2025 and 2026. This presentation was derived from a speaker engagement I did with GNG Networking Group in March 2025 on the same topic. Though certain additional events have occurred since then, I expect my advice in this environment to remain the same. 2. The current tariff landscape. In February 2025, President Donald Trump finalized significant tariffs on Canada, Mexico, and China. These include a 25% tariff on Canadian and Mexican goods and a 10% tariff on Chinese goods. Additionally, just 2 weeks ago, Trump announced a 50% tariff on Canadian steel and aluminum, escalating trade tensions further. These tariffs are a response to issues such as fentanyl trafficking, undocumented migration, and the U.S. trade deficit. Economists predict these tariffs will negatively impact the U.S. economy, raising inflation and decreasing economic output. The Canadian economy is also expected to suffer, with industries such as automotive, agriculture, construction, and manufacturing being particularly vulnerable. 3. What is Donald Trump trying to achieve? President Trump's tariff policies are part of his broader America First agenda. His goals include reducing the U.S. trade deficit, encouraging domestic manufacturing, pressuring Canada, Mexico, and China to address U.S. concerns over trade practices and border security. However, these policies have led to increased uncertainty in global markets, with many economists warning of potential economic downturns. 4. Sectors likely affected. Several key sectors in Canada are expected to bear the brunt of these tariffs. Automotive industry. Canada exports billions of dollars in auto parts and vehicles to the U.S. Tariffs will increase costs and disrupt supply chains. Agriculture. Canadian farmers rely heavily on U.S. markets. Tariffs could reduce demand for Canadian agricultural products, affecting farmers' incomes. Manufacturing and construction. Tariffs on steel, aluminum, and other materials will drive up costs, leading to project delays and potential layoffs. Professional services. While not directly impacted by tariffs, professional services firms will feel the effects through their clients in affected industries. 5. Impact on jobs, economy, and stock market. The economic impact of these tariffs is significant. Job losses. Industries reliant on exports to the U.S. may face layoffs as demand decreases. Economic slowdown. Higher costs and reduced trade could lead to slower GDP growth. Stock market volatility. The uncertainty surrounding trade policies has already led to market sell-offs, with the S&P 500 nearing correction territory and the Dow Jones experiencing declines. 6. Monetary and fiscal policy response. The Bank of Canada may respond to these economic challenges by adjusting interest rates to support growth. However, with inflation concerns rising, the central bank faces a delicate balancing act. The Canadian government may also introduce fiscal measures, such as subsidies or tax relief, to support affected industries. 7. Inflation and GDP growth. Tariffs typically lead to higher prices for goods and services, contributing to inflation. Economists predict that U.S. economic output could decline by 1.5% in 2025 and 2.1% in 2026 due to these tariffs. Canada's GDP growth is also expected to slow as trade tensions persist. 8. Strategies for Canadian businesses. Given the uncertainty surrounding tariffs, Canadian businesses must adopt proactive strategies to mitigate their impact. A. Diversify markets. Reduce reliance on the U.S. by exploring new markets in Europe, Asia, and Latin America. Leverage trade agreements such as the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, and Canada-European Union Comprehensive Economic and Trade Agreement, CETA. B. Strengthen supply chains. Identify alternative suppliers to reduce dependence on tariff-affected imports. Invest in domestic production capabilities where feasible. C. Cost management. Implement cost-cutting measures to offset increased expenses. Negotiate better terms with suppliers and explore bulk purchasing to reduce costs. D. Advocacy and collaboration. Engage with industry associations and government bodies to advocate for favorable trade policies. Collaborate with other businesses to share resources and strategies. E. Focus on innovation and value-added services. Invest in research and development to create innovative products and services that can command premium pricing. Enhance value-added services to differentiate from competitors. 9. Impact on the professional services sector. The professional services sector, including accounting, legal, and consulting firms, will experience indirect effects from these tariffs. Clients in affected industries may reduce spending on professional services, leading to revenue challenges. To navigate this, firms should expand service offerings, diversify into advisory services, helping clients navigate tariff-related challenges, strengthen client relationships, provide proactive guidance and support to clients facing economic uncertainty, leverage technology, invest in technology to improve efficiency and reduce operational costs. 11. Coping with the psychological impact of tariffs on business owners and clients. Beyond the economic and operational implications, we must also acknowledge the psychological toll that tariffs and trade uncertainty can have on Canadian business owners and their clients. Many entrepreneurs and professionals are already dealing with inflation, talent shortages, and rising interest rates. The addition of unpredictable trade policies can lead to increased stress and anxiety, fear of financial loss or business failure, decision paralysis due to uncertainty, reduced morale among teams. Here are a few ways to cope and build resilience. A. Mental health awareness and support. Make space for conversations around mental health in the workplace. Encourage employees, and yourself, to seek professional support when needed. Registered therapists can provide valuable assistance in navigating stress and burnout. B. Peer networking and mentorship. Join professional groups like the GNG Networking Group to share experiences, ideas, and mutual support. Engaging with others facing similar challenges helps reduce isolation and builds emotional resilience. C. Focus on controllables. When global conditions are unpredictable, focus on what you can control: customer service, internal operations, and strategic planning. Small, consistent actions build confidence and forward momentum. D. Lead with transparency and empathy. If you lead a team, communicate openly about challenges while reinforcing your commitment to finding solutions together. Empathetic leadership builds trust and unity in difficult times. E. Practice self-care and strategic rest. Entrepreneurs often feel pressure to push through during a crisis. But burnout helps no one. Schedule time for rest, exercise, and disconnecting from business-related stressors, even if only briefly. Now let's talk about something that's becoming more and more relevant: doing business in uncertain times. We've entered a period where volatility, whether political, economic, or geopolitical, isn't the exception, it's the norm. And for Canadian businesses, especially small businesses and those of us in professional services, this means we can't afford to take a wait-and-see approach. So what do we do? First, scenario planning. This means taking time to map out a few different what-if situations. What if tariffs double? What if a major client cuts spending due to increased costs? What if interest rates change again next quarter? Thinking through these possibilities helps reduce panic and gives you a playbook when surprises happen. Second, financial resilience. In uncertain times, cash is king. Businesses need to build strong cash reserves, avoid over-leveraging, and maintain access to credit facilities. This isn't just good advice, it's survival strategy. It allows you to adapt without being forced into bad decisions. Third, continuous learning. Stay informed. Subscribe to economic updates. Follow trade policy developments from both the Canadian government and the U.S. Department of the Treasury, and participate in events like this one today. The more knowledge you have, the better your decisions, and the quicker you can pivot. Ultimately, businesses that can stay agile, watch the road ahead, and make bold but informed decisions will be the ones that thrive in this era of uncertainty. Closing thought: tariffs and trade uncertainty are testing the financial and emotional resilience of many Canadian businesses. But with the right mix of strategic planning, innovation, community support, and mental wellness practices, we can weather these challenges and emerge more adaptable and prepared than ever. If you have any questions for me on how to cope with tariffs or any other business, accounting, strategy or tax issue, I, Dane King, Chartered Professional Accountant and Business Advisor, shall be happy to speak with you. At Stratking Accounting and Tax Professional Corporation, we help you with ideas to get you ahead. Reach out for further planning, accounting, tax or advisory help on our website at www.stratkingaccountingandtax.com or call Dane King at 1-888-865-3870 extension 101. Thanks for watching. If you like this and our other videos, like this video and subscribe to our channel to get important updates from Stratking Accounting and Tax Professional Corporation and Dane King.